U.S. markets are closed today, but futures are down after President Donald Trump's latest threats. The European Union has, for now, put on hold its plan for retaliatory tariffs should Trump follow through. But Canada is also preparing to send troops, which could potentially make it a target of Trump's tariffs as well. So let's break it all down with David Doyle, head of economics at Macquarie Group. It's good to have you join us. Thanks so much.
Thanks for having me.
This is an interesting development. There's so much to go over here. I guess, first of all, how significant is this latest tariff threat that the U.S. is imposing on the EU?
Look, I think it's very significant. I think it shows a bit of a shift in tone versus what we had in the second half of 2025 from the Trump administration, where it seemed to be there was progress being made on the trade front towards deals, a lowering of trade policy uncertainty. So this is, I think, a bit of a curveball in the sense that you're seeing the tariff threats come back to the forefront, in contrast to what many people expected, which was that 2026 would be a calmer year out of Washington. So I do see it significant in terms of it's a bit of a shift from what we were seeing late last year. And I think the other thing that's notable is that the response from the EU officials and administration has been much stronger, right? Much more willingness to be combative than what you saw in and around the Liberation Day announcement last year, which of course raises the specter of potentially some significant retaliation being imposed should the Trump administration indeed, proceed with the threatened tariffs.
Yeah, and speaking on that retaliation, the EU said it could retaliate with a 93 billion euro retaliation package against the U.S. We're now seeing reports that they might hold off on that. But if something like that retaliation were to happen, how would that affect the markets, and what sectors do you think will be hit hardest by a retaliation and tariffs?
Look, I think that would be a risk-off event, right? I think, if we go back to what occurred last year and in around Liberation Day, when we saw the broad market sell-off occur, particularly in some of the more trade-sensitive sectors. It was, I think, largely on fears that you would see trade partners retaliate and retaliate substantially against the United States. And that didn't really come to fruition, which I think is part of the reason why the economy has held up so well, despite the fact that the U.S. proceeded with implementing tariffs. It's the fact that there was no retaliation. If we do go down a path where, I should say outside of what, minor retaliation from countries such as Canada, if we go down a path where most of the U.S. trade partners are retaliating and retaliating substantially against the U.S., I think it would be bad for markets, bad for the economy, and we could see a significant correction if things go down that path for sure.
Other than, this hypothetically 93 billion euro retaliation package, are there other options for the EU in terms of how they respond to these tariffs from the U.S.?
Look, I mean, they could go in one or other direction. They could try a more diplomatic approach. They also have the ability to sort of ignite a more broad-based retaliation that wouldn't just be tariffs. It would include restricting IP rights. It would include potentially going after the services sector like tech and finance, restricting market access to U.S. companies. There's a broad-based clause that I think was passed in 2023 or so that has never been used. That they could leverage, and I believe there's some people from France that have suggested that they could go down that route. So that I would argue would be potentially even more substantial in terms of what it could do than what the retaliatory package of the 93 billion euros would involve. So that would be on the more aggressive side. And then, of course, the less aggressive side would try and be more diplomatic, try and work out some sort of military-related solution with the U.S. in terms of having the defense of Greenland beefed up.
Okay, let's bring Canada into this now, because we know that Mark Carney has floated the idea of potentially sending soldiers over to Greenland for military exercises. If something like that were to happen, is Canada at risk of also being hit with more tariffs from the U.S.?
Yeah, I mean, if Canada is treated in the same vein as it seems as though Trump has threatened this group of European countries, then you would probably anticipate a similar threat to come to Canada if they participated in something like that. Now, of course, the difference with Canada is that this is occurring in the backdrop of a broader negotiation, which is over the renewal of the USMCA slash CUSMA. And so that, I think, starts to impact things. The other difference with Canada is that, what we've seen, if Trump uses the Emergencies Act, the U.S. International Economic Emergency Powers Act, to implement these tariffs that are being threatened, the way it was implemented before is that USMCA slash CUSMA compliant goods that the increased tariff rates weren't applied to. Mm-hmm. And so that's roughly, most estimates of that are in the 80 to 90% range. So that would limit the degree to which the tariffs would impact Canada's economy directly. It would just be on those limited goods that are currently impacted if we went down that path. But I think the broader concern for Canada, should be how would that affect the renegotiation or the renewal of USMCA CUSMA that's going on now.
Yeah.
And we're already seeing other policies start to impact that, like the trade deal that was reached with China last week, I think could impact that. So that to me is, whenever we're looking at U.S.-Canada relations in 2026, front and center has to be that the renegotiation or renewal of the trade deal.
Yeah, and just very quickly, like you mentioned that trade deal and just how much Canada is, and certain sectors have been buffeted by these tariffs because of CUSMA, because of the free trade agreement we have. Are you optimistic with these renegotiations or renewal of CUSMA coming up in the summer? I mean, there's so much happening every week, especially when you bring in everything that's happening between Canada and China. Are you optimistic at this point that we could at least keep what we have?
Look, I don't keep what we have is I don't know what you mean by that, but
we'll keep the free trade agreement we have currently, keep something similar at least.
Yeah, I mean, I think so. I am optimistic that a deal will be reached. I still think that that's the most likely scenario for 2026. I think the path there may not be, a straight line to a deal, that we might get more curveballs and strong arm tactics along the way. I also don't think that the deal might not be something that Canada will love, right? Mm-hmm. There might be parts of it that Canada will have to hold its nose up and say, look, we just have to accept this. But I would say is that that's still better than no deal at all. Mm-hmm. So I do think that the probably most likely the Carney government is trying to drive a hard bargain, and the Trump administration is also trying to drive a hard bargain. So it will be a tricky path ahead to get there. Mm-hmm. I do think there will be elements of the eventual renegotiation or the renewal that Canada won't love. But that's, to me, is still a good outcome in the fact that at least if we end up with a deal, I think that that's something that lowers the uncertainty that's currently a major drag on Canada's economy. And even if we get, we get some sort of a deal, that uncertainty falls and things can look better for the economy overall later this year as a result of that. So that's the baseline case. But of course, okay. We're already surprised somewhat with some of the rhetoric coming out of Washington with regards to Greenland. It's possible that shifts on Canada and they become more aggressive as they were last year again as well.
All right, lots to watch for. That's all the time we have. David Doyle, Head of Economics at Macquarie Group. Appreciate your time. Thank you.